What's up, everyone? Dylan here. I wanted to jump on and do another episode of the weekly analysis video. In this video, I'll go over past price action. I'll also go over areas of interest that I'll be looking at going forward. And I'll briefly talk about the Fed decision that's going to happen on this Wednesday. So with that said, we'll hop right into it. So looking at a naked daily chart of the S&P 500, we can see that there is clearly some strength by the bulls, okay? So this is a daily chart, right? And just by looking at this, right, with no other indicators or anything else, you could see that the wicks have been long on the downside, and each pullback has been at a higher low compared to the previous. Okay, so see how this low, the second pullback was at a higher low, and then the third pullback was at a higher low than that, and then so on and so forth. So today was the fourth higher low since last week. Okay, and it's very important to note that since last week, there has been a lot of different breaking news regarding the whole bank scenario that has been going on, okay? And a lot of that news has been bearish. So the fact that the market is still, printing higher lows despite all of the uncertainty, right? You had a few other banks, kind of go underwater, and don't get me wrong, there's been a few good pieces of news, but the fact that the S&P has been very resilient despite the bearish news is something that should not go unnoticed. Okay, another thing that I wanted to speak about on a side note is the fact that I have put this setting on. I've explained it twice, right? It's in the cheat sheets of the Discord for all TradingView users. You don't have to do this, but based on my own due diligence, research, back testing, this setting on the contiguous contract for ES, NQ, YM, RTY, it tends to work better because there's been an unusual spread between each roll, right? Each roll has had like a 30-point spread between the months. So for now, I will be using that setting. I've had a lot of questions about that, okay? So, like I said, very, very important to see this higher low pattern. On the flip side, NQ has been very, very strong, okay? So ES has been able to sustain value and continue higher in an uptrend thanks to the NASDAQ. Okay, so the NASDAQ has been much stronger than ES, mainly because it has less, exposure to the financial sector. Okay, so a lot of the news that has been coming out over the last 2 weeks has been bearish related to the banks, right? The financial sector. The NASDAQ is mainly, consisted of the tech sector, okay? Whereas the S&P has more skin to the financials. So that's why the S&P has been lagging, a ton relative to NASDAQ, okay? So today was the first day that we've seen ES actually show more strength than the NASDAQ. So if that continues, you want to see the S&P able to break above tough resistances in order to kind of lead the market, right? Whichever index is stronger, you want to see the lead, right? And because it's stronger, you technically want to see it break through tough resistance, okay? Same on the downside, right? If you have, a bearish market, you want to see the relatively weaker index lead to the downside, and you want to see that relatively weaker index break below supports. So that's just something that I use every single day in all types of markets. So going to the 690, just a different visual of this higher low pattern. This is very, very important going forward. And the NASDAQ has the same exact higher low pattern as well. So with that said, we'll hop into my drawings. Right, we'll go to ES, and you can see I highlighted this drawing in the Discord this morning in pre-market plan, and you could see clearly since last Monday, the S&P and the NASDAQ have been respecting this trend line. Okay, so here's the S&P, and then the NASDAQ has been respecting a very similar trend line, right? You see this since the same day, same reference point last Monday. So NASDAQ has 1, 2, 3, 4, 5 different tests, whereas ES has about 3 tests. Okay, so going forward, the bulls need to sustain value on both. Okay, now if NASDAQ breaches, there is a chance that the S&P will hold there, considering it showed relative strength today. However, if the NASDAQ breaches and really accelerates to the downside, chances are S&P is going to do the same. Okay, so if both indices break below that higher low pattern, I would expect the S&P 500 to get down to the 3840 to 3815 area. Okay, that area is this key support from mid-December to early January, right? And the last low was at 3839.25. So I would expect, if this trend line breaches on both ES and NQ, I would expect for the S&P to fall down to that 3840 to 3815 region. Okay, very clear on that. Okay, so definitely keep an eye on both of those. So this 6-hour supply zone, which was formed on March 9th, is very important, and I've been talking about it for the last week. I even explained it on the last video as well. So what I want to see, and I will participate in this, but I will show you guys a better short in my opinion. What I want to see is a move up into this zone, which could then trigger a move back down to test this trend line again, and then it'll be up to the bulls to hold that, and if they cannot hold that, then it'll go back down to this gray shaded area. Okay, so this 6-hour supply zone also lines up with a little bit of a trend line as well. So you could see it would have the supply and that upper trend line that would it's kind of causing a wedge, right? You see the bottom and the top has been getting respected. So it could look like that. Okay, now if this does not work, if the S&P remains resilient and bulls continue higher, this next short, in my opinion, is slightly better, right? So the next short would be this. Let me get rid of this. The next short would be this. You have this resistance on NASDAQ, right? It's tested numerous times, 1, 2, 3, 4 different times, all in February, right? It's proven to be strong. You could even kind of use a general range, say, in this general area, right? Because there's some wicks in there, okay? So that area on the NASDAQ lines up with 6-hour supply on the Dow, okay? And I could see that it lines up by using this measured move tool, okay? So you go in this one, and it's right here. It says price range. So essentially, from current price, the Dow is about 2% away from that supply. Same deal with NASDAQ. You'll see from current price, it's also about 2%. So if those two align, NASDAQ and the Dow, at those resistance areas, when I have two indices at areas of resistance, it has a better chance of working historically. And then when you have three, if you have all ES, NQ, and the Dow at resistance areas at the same time, those are like one of the best, highest probability setups that I take. It doesn't happen often, but when it does, I'm very interested in trading those. So, like I said, the first one will be the S&P at this 6-hour zone with the trend line. I will participate in that. A bit smaller size, but I'll take a stab. Because yes, the bulls have been in near-term control, but then again, you see there's been lower highs as well. So you have a near-term uptrend, right? Because I'll get a lot of questions saying like, hey, the bulls have been in control. Why are you looking to short? It's because the bulls have been in control since Monday. The bears have been in control all month, or the last 2 months. So this trend outweighs this trend because this is near term and this is longer term. Okay, so longer term always outweighs near term. So that's why I can justify taking a short there. Okay, there's a few different confirmations. There's supply, there's the trend line, and there's the lower high pattern as well. So like I said, if that works, cool. If not, I'll be looking at this NQ and YM short. Only if they get there at the same time. If NQ is in this shaded area, whether it's the bottom or the top, doesn't matter, while YM gets up there, I'll take a stab at the short. So those are some plays that I'm looking at right now. I also had this on KRE. So KRE has been falling off a cliff, right, because of all of the regional bank news. Even today, you had FRC, First Republic Bank, down like 50% at one point. It got halted a few times today, and a lot of the news headlines that I saw today were centered around the regionals. So I'm looking at this 3-month demand. It's a quarterly demand, right? So each quarter is comprised of 3 months, right? And you could see there's a pretty nice looking demand zone at the 3 month that on a quarterly demand zone. So this, in my opinion, would be a good risk reward. It's riskier because it's falling off of a cliff and it's essentially like catching a falling knife, but this is something that I would take a stab at. So if we're doing a long position, say, right, you're risking to the bottom of that demand zone, right? And then let's just say you target this area right here where price acted as some support. That's a 3.5 to 1 risk reward. So in my opinion, it's worth from a risk reward standpoint, and the fact that this is a very, very clean demand zone, which would also line up with this uptrend as well. If you kind of go like this, right? So, right, it's been an uptrend since 2009, right? Since the 2008 banking crisis. It's had multiple huge moves off of this trend line, and then that would line up with that quarterly demand zone. So that's something else that I'm looking at. I have an alert set on my brokerage account. So when price crosses like 39.80 or something like that, I'll be notified. So that's just something else that I'm looking at. I'll like I said, it's risky considering it's in a very sharp move to the downside, but I'll probably take like 10,000 shares. Risk say 60 grand to make close to 200. So we'll play that by ear. So that's what I'm looking at going forward. On to the FOMC. This one's a tough one because of the banking crisis that's happening. So usually I have a pretty good understanding of what to look out for on these Fed events. Whether, they're going to hike by 25 basis points, 50, 75, whatever. And then I usually have a good understanding of what's going to happen in the future based on the federal funds rate futures that, they price in upcoming events. That's what I look at. So this one is tough because the futures have been all over the place. They've been up, they've been down, they've been negative, positive, all over the place. So this one's a tough one. I've seen different trade desks and analysts call for crazy things. So the consensus as per this website is 25 basis points. I've seen people saying that they're going to raise by 50 basis points. I've seen a ton of people say they're not going to raise rates at all, and I've even seen a few desks say that they're gonna cut rates. So it's all over the place. I don't necessarily think the rate decision is what's important. I think their outlook is going to be important. So as you could see, the decision's at 2 p.m. But then when Jerome Powell speaks, which is at 2:30 p.m., that press conference, I think that's going to be more important. So that's a total guess. Like I said, it's a shot in the dark for this particular one coming up on this Wednesday because it's all over the place. Are they going to stop, the QT process? Are they going to go into QE, right? Right. A lot of the banks put just unnecessary stress on the market. So the Fed is going to have to alter or they're not going to have to alter, but they might decide to alter their plans going forward because of that. So there's a lot up in the air, and I think that the press conference at 2:30 p.m. Eastern time is going to be, the main event, and I really do believe that the market is going to have a pretty big move, as Carmine said. He said big move is coming Wednesday. So I agree with that. So it's important to have a clear, roadmap on the chart, right? I know exactly where I'm going to participate. I'm going to participate up here. I know that this trend line is important. I know down here is important. I know where my levels are on NQ and the Dow. So I have a clear roadmap where the market can move up and down 200 points and I'll be, very focused, and I'll have a good understanding of what I need to do. Okay. And that's what you guys need to do instead of just guessing or, trying to figure out what to do while the market is volatile. It's tough. So have a clear area of interest, and then base your decisions off of that. So that's about it. Let me know if you guys have any questions. Feedback is always appreciated, and I'll talk to you guys soon. Peace.